Jerome Powell's remarks at the beginning of the meeting seemed quite bullish, suggesting a shift towards more balanced approach to employment. It almost felt that he was hinting at a desire to cut rates already, but constraints were evident, and possibly due to the Fed using future meetings to signal their policy intentions. But this strategic approach involves putting decisions to later meetings while providing the market with potentially dovish economic projections. And the discussion around inflation was, in my opinion, particularly noteworthy. So Powell suggested that if the recent trend of lower inflation continues, it could lead to a different policy stance. However, the elephant in the room was the banking sector, and especially after the significant drop in the New York communities bank stock. Oh, did the market just sneeze? And the ending of the bank term funding program raised alarms about the potential issues of not being addressed or even acknowledged by the Fed or the media. Lots of questions on bank stability at the Fed meeting, especially after significant banking developments and changes in the Fed statement regarding the banking system's resilience, was, to say the least, baffling. It made me wonder if reporters were instructed to avoid the topic or if there was a general oversight of its importance. Maybe everyone forgot their glasses today, right? Okay, I just wanted to show you the trade, and then before that, just wanted to wrap it up and say that overall the meeting left me pondering the Fed's future moves, especially regarding the rate cuts and their handling on the banking sector stability. The omission of key statements and the lack of probing questions on banking issues were particularly concerning, to say the least, and highlighting the need for greater transparency and scrutiny in future discussions. Perhaps next time we'll get a magic 8 ball to help with the Fed's communication strategy. But before further ado, let's just dig into this trade. So there were a couple of trades that we took. The first trade was taken on the 30th of January, and it was closed this morning. And this was the trade I actually wanted to place a little bit more emphasis, since the title of this video is telling you, giving you a bit of a hint of what happened. So this trade was taken on the 30th of January, and it was taken in the morning session, which is the London session. And then if you just skip forward, you can see the entry price is 17,016. Our stop loss is 1726, so it's only 10 point stop loss. If you fast forward to this morning, so this will be the 1st of February, you will see here, let me just find where I closed the trade precisely. Okay, so right here, we are already standing at a 1 to 23 risk reward trade, and the trade is still open. And just a little bit later, this was this morning already on the 1st of February, 7:37 in the morning, the trade stands at a 1 to 26 risk reward ratio, and I held this trade for over 2.5, almost 3 days. And at the same time, yesterday I waited for the FOMC meeting to be kind of concluded, and I took another trade on Dow, which I'm just trying to find the beginning of it now, and it is right here. You can see at 7:47 p.m. London time, which is literally 15 minutes after the announcement, and this is my original setup, and the trade currently it's still open, it's going in the right direction. And right here, this was the last update. Sorry, this was the other trade. The last update on this trade was we're close to 350 400 points in profits, and so I've moved my stop loss below the entry. But I just wanted to touch a little bit more the inability to predict actually trades as such. So with all due respect, before taking the trade or before closing the trade, I was not aware that markets will take such a direction. I was not trying to predict the market direction. I was just following the rules of my day trading strategy to enter the trade and to minimize my risk on the trade. And then from there, I was using time as a leading factor to tell me when to exit the trade. So in all honesty, I don't think that anyone can predict where the markets will go. Markets, I strongly believe, are random. I believe in the inefficient market hypothesis. So in other words, markets probably are efficient for just a tiny amount of time. And if you're trying to predict the day or the week or the month even, you're going to have a hard time. So I'm definitely not in the business of market prediction. On the other hand, I believe in asymmetrical trading returns, and these two trades they do provide a solid proof that actually asymmetrical returns they do exist, and they can be achieved. So in in this first case with the DAX trades, it took us almost 3 days. So it's it's very unlikely that you're going to have a trade which you can actually open and close within the same trading session and give you a double digit return as this one. Even though in January we had another trade which was a double digit trade, and it actually was open and closed within the same trading session. But overall, this was a very exceptional trade, and on average, you should probably hold a trade, or at least that's what my stats are saying, anywhere from 2 to 5 days in order to achieve those results with my strategy. And again, it's very important when you're opening a trade to not be influenced by the price, because if you look at any of those trades, I could have been tempted so many times to take profits. Like let's take the DAX trade as an example. So anytime that the price is reaching a new low or hitting a support level, usually traders are tempted. So one time could have been here, then another time could have been here, then you have so many lower lows here that you could have been tempted to actually take profits, and profits were taken here before the price bounced back to the 16900 again. I think that's it for today. I'm gonna wrap it up, guys, and if you have some questions, I'll leave some links below. You can book a session with me. I have a few time slots available throughout the month. So if you want to ask me any questions, or you have some doubts, just reach out to me. I'll be happy to have a quick chat. Thank you, guys. Bye.